second day of the 8th edition of FinWeek in Bratislava. As I was here yesterday moderating, we had two great panels. The first one with a heated debate on CBDC, central bank digital currency, with European Union in favor, central bankers in favor, people from the banking industry being somewhat skeptical. The debate was hot and very heated and very interesting. We also had a great seminar regarding the European Union's capital market unions and the need for capital markets unions for European growth and prosperity in the future. Today, we have a very interesting topic, banks versus fintech. So there's a bit of adversary built into today's first panel as well. And before we start, I would like to thank our sponsors. We have the main partners, the Ministry of Finance and the Central Bank of the Slovak Republic, Visa. Partners, Dekta, Prosper and Pavlovich, EUBA and Crif. Then we have Israeli Embassy, FAMBI, RBX, ESCA Finance, Bursa Cenných Papírov of Bratislava, and the export partner Lufthansa Group. Media partner is FX. So we thank the sponsors making this event possible. And let me introduce Peter Bielik, who will be moderating the first panel. Welcome on board.
Thank you very much. I discovered that I didn't have enough time to make my suit perfect. Thank you very much for the introduction.
Nice.
Lady and gentlemen, welcome to our next panel. The world is changing, and we no longer have only banks and their customers. There is also fintech companies that show the traditional banks that it can be done differently. The aim of our discussion today is to find out whether these entities can cooperate and are doomed to competition. In our discussion, we have one bank representative, a journalist who follows the development in banks from the front row. Now the others, bank digital transformation consultants, and of course, representatives of fintech companies. I'm really looking forward to a good discussion. As my colleague mentioned before, really good speakers together from both sides of the situation or the industry we are talking about. So please, first of all, let me introduce the lady, Martina Sobtová, editor-in-chief in magazine. The only real representative of a bank is Mr. Tomáš Pristac, business development manager at, sorry, this something different? No, sorry. Yeah, okay, so Tomáš Pristac is there, sorry. Business development manager at Crif. Welcome. Now, coming to the back, sorry. Tomáš Reytt, head of sales and distribution channels, CZ and SK. Mr. Martin Chaya, operation manager, partners investments. Welcome. Vladimír Vaňo, economist, fellow Globsec. Sam Bobojev should be online with us. Is that right? Okay. Hopefully, Sam is following us, hearing us, and watching us. Yeah, hello. Welcome, Sam. Sam Bobojev is product. Sam Bobojev is product manager TPF, and he will be online with us. Last but not least, Mr. Adam Tretiak, senior business development manager, Automatic. Welcome. Mr. Reytt, mBank is known as a bank for youngsters. You have built your communication strategy on new banking technologies, and does it work really? Is this a good business model?
Good morning. Thank you for kicking in this discussion. Yes, it works. I think we are quite satisfied with the model already 17 years on the market. So that's time we started with primarily focus on the people, on the young people. Currently, they're not young anymore. They're growing up. They're getting richer and richer, accumulating their wealth, and they are still with us. So that's pretty nice. So we have quite loyal customers. This is not what we're going to do at the moment. So we're still continuously focusing on the new customers, young kids, and trying to do the similar story again with them. So we do believe that they will again grow up with a few years, and afterwards we will be benefiting, or they will be benefiting with us, and we with them. So the model which we started and come up with the market a few years ago still works, and we do believe it will work for the future as well.
Well, I still have in my mind the slogan "I svou banku můžete mít rádi." Well, this is something really new you are doing. You have also some engagement rings. Is this for the whole life now?
Well, actually, during this year, we've been thinking what's up, how we can differentiate ourselves compared to the others. And we come up with the idea that everybody's going to cashless at the moment. So the payment tools should be something where we can differentiate, where we can have a leadership. So at the moment, everybody, I think, pays with the mobile. We think, okay, but there's some other tools what we can elaborate. So if you look at me, I have a swatch which you can pay with. Newly we launched the rings. There's some bracelets also a few weeks ago, and in the following 2 weeks, we're going to come up with some other payment tools for the kids, especially, which will be similar like the bells on the hand. We have some other things already in our head. Next year, we're trying to launch here in Slovakia car pay, which we already did in the Czech Republic, and so we do believe this differentiator as a payment methodology, as a payment tool, something which the customer will be familiar with, something which customer will appreciate, and also it gives us an opportunity to come up with something new. So at the moment, these rings have just a payment method, but also we know that, and you already know that's Aura and some other providers will try to put all the let's say bio and health measurement and the payment and the payment tools together. So during the next year, there should be something which will not just be payment, but also helping and monitor the customer health and behavior whatsoever. But for us, this is something what we do believe might differentiate compared to the other.
Ďakujem vám veľmi. Thank you very much for these words. Well, it's really very interesting. How do you get your inspiration? How do you want to get to the youngsters and communicate with them? At the beginning, I forgot something. Sorry for that. We have a presentation where Martina, Mr. Martin Horvat should be here, but he will be replaced by Zuzka Brendzová, and she will show us the presentations. Sorry for that. We will begin with the presentation.
Hello, everybody, and thank you for a word. Yes, this is the topic which is about the youngsters, about the generation Alpha, which you maybe know, maybe not, and I will give you insights from our research. But first of all, I would like to introduce myself. I'm Zuzana Brendzová, and I'm business consultant for AI and digital products at Elevon.io. It's an innovation studio focusing on creating digital solutions. So let's start. But first of all, I would like to grab your attention. I would like to ask you one simple question. Have you ever heard your kid say, I was robbed on Roblox? Maybe haven't, maybe you have. But if not, it's a topic which is only a matter of time. Maybe some of you are parents already, and Roblox is a game which is very popular for our kids now. But first, I have to be more concrete about Generation Alpha, and maybe you will have an opportunity to ask yourself if it is also the topic of your kids. So, Generation Alpha. Generation Alpha are kids born or yet to be born between 2010 and 2025. It will be over 2 billion by 2025. It's expected to be most educated and most largest generation in the history, and it expected to stay live the longest. This generation, there is one alarming fact for this generation. By the time they turn 18, Generation Alpha will have 30,000 30,000 hours in front of screens. That's more than 3 years of their life. So it's really alarming now. So can you imagine this huge number of hours they spend in front of screens? That is really important fact also for you, which I would like to create some business, some financial solutions. We made a research. We have done it a few weeks ago, and I would like to share with you some insights from Central and Eastern Europe about this generation. This generation spent 3 to 5 hours a day on screens. By age 9, most of them already have their own smartphone or tablet. And most popular apps are, how I said already, games such as Roblox, YouTube, and what is obvious, I think. But what is very important, there is a really huge parental involvement in their lives. 75% of parents actively monitor children's life and apps that they use and prefer also apps with strong parental control. And what is interesting are values. Values for these kids are purpose. They value purpose over money. So these are the main topics which lead to concern about creating some financial solutions or digital solutions or anything in this generation. So I would like to give you 4 advices. First, start early. This generation is already here. If we don't start using now, 37% financially literate by the time they reach adulthood. Go mobile. I think it's obvious, but Generation Alpha expect everything mobile friendly. Third, our parents' trust. You have to build trust with your parents. They are gatekeepers to this generation. And last but not least, align with their values. Because this generation cares deeply about sustainability, fairness, issues like inclusion. Have it in mind when you are creating something. That's all from my side. I can give you one last word. If you are not preparing today, you are already behind. So, act now for this generation. Find solutions which are aligned with your values, or topics which I was talking about. Here, you can see QR code, you can scan it, send us your email, it can give you inside our study. Just contact us, leave us an email, and do information. Thank you very much.
Thank you very much. Yeah, that was really interesting of youngsters and their behavior. I have to also mention that we have some competition here with the golden win. So some coins which are very expensive. We have proof coins from silver, and if you answer some questions, win them and them up to accounts as a good investment for the future. Mrs. Sopkova, you have seen the presentation from the first floor, as I mentioned before. So this is the speaker. What do you think about these innovations? How do their inspiration the external companies, the fintech companies, or can they do it alone by themselves?
Good morning, everyone. Thank you for your question. I give you 3 hints from my generalist perspective, which maybe answer your questions. You know, I'm working in banking industry now over 10 years. And I remember about 7 years, 8 years ago when we started to write about fintech. And at this time, it was bank versus fintech. When I'm writing now, it's not bank versus fintech. So I was questioning maybe why is there even now bank versus fintech? Because I think it's bank and fintech. It has totally changed from my journalist perspective. It's one point. The second point is when I used to write something about fintech from banking perspective, usually even 4 or 5 years ago, I asked the bank, and it was about interview with some CIO or someone about some board, maximum board -1. But I think in recent years, it changed so much. Usually, when now I'm writing about fintech and partnership with fintech, I usually get a name of someone who's responsible for this. So the banks are already having people who are responsible for just communication with the fintech. And it wasn't years ago. So that's the next thing which change and which shows the fact that banks are really interested about the fintech and partnership with the fintech. And last but not least, but we can see that many banks today have their own innovation lab. They're trying to get new ideas. They're trying to get new people and innovate as much as they can, but they are aware of the fact that they cannot do it by themselves. Even if many banks call today themselves technology companies, and some banks don't want to call them just banks and they call themselves technology companies, but still they need some help from the outside, from third parties. And they have their own innovation lab. We can see in Czech Republic, like C-Starter of Česká spořitelna, KB Smart Solution, or started by ČSOB. Those are 3 biggest banks in Czech Republic, and they have their own innovation labs. So when we take into account those 3 facts together, we can see that banks are seeking further inspiration outside. Of course, they're visiting like conferences. Many Czech banks, for example, have their own matters outside of the Czech Republic. So, of course, they have inspiration from there. But yes, banks are seeking help and innovation from the outside, also from their own customers, because they have a lot of data and they are learning how to work with the data, how to proceed the data, and what to do with it correctly. But it's not more discussion, bank versus fintech, but it's bank and fintech. And maybe last point, even for fintech, it's a very good point because many people think when we say a fintech, they see some new bank what is doing something, and it's totally outside like banking system. But when we talk now in fintech and what I see, like the member of fintech associations, it can be, for example, just cybersecurity company, but which focus more, for example, on finance aspect or payments or whatever. Early years ago, it was just cybersecurity company. Now it's called a fintech, and those company needs to work with some big player. It cannot work on their own. So yes, I think it's about partnership, and they are seeking inspiration outside their own.
Thank you very much. Now we are coming to Sam Boboev, who is online with us. A question for you. How it is possible that the fintech companies are better informed what the customers of the banks want? The banks are just much more richer. They can do their own analysis. They can do their, I don't know, marketing and everything, what they want, gather information. And still the fintech companies seems to have a better feeling of what the customers want. How it is possible?
This is actually a great question. I think there are several reasons for that. Sorry, guys, can you hear me well?
Yes.
Yes. Fantastic. There are several reasons for that. First of all, fintechs are built around customer pain points. That's why I would say they are rather customer centric in comparison to the banks. Banks, how they started, they start like, okay, we will build this product and the customers will start using it because they need banking accounts, they need credits, they need loans, they have to use it. However, how fintech started, for example, if we look into Wise, they said like, okay, we see customers are having problems with international transfers. It means we have to build a product that will help them to reduce the costs or improve their experience. On that way, they started implementing their product and they are more agile in comparison to traditional banks, which have like a very old legacy technology, and it's very difficult for them to change the technology, move customer information or data from one place to another one, in comparison to that new fintech companies such as Revolut or let's say Wise, N26, and any others. One of the other reasons is regulation. This morning, I read the news about Goldman Sachs being hit by a regulator regarding Apple credit cards. If you remember, they had a partnership and Apple launched these credit cards. But this morning, I read, as I said, news Goldman Sachs was hit because of this. And as you know, banks cannot easily implement new products or features or services because they have strict restrictions. They have to follow certain rules. That's why they are, I believe, a bit behind when it comes to modern technology or new solutions. And the fintechs are far ahead of traditional banks.
Yeah, in addition to what Sam said, we at Crif are suppliers for both for banks and for fintechs. And we see it very similar. Banks are like robust organizations. Yeah, they have complexity at the highest level and are dealing with million things every day. Fintechs are more specified with the targets. Maybe I will just say it in one short example. Imagine a bank which is like offering investment funds or ETFs. So they have like sales plan, they have like funnels, branches or marketing and everything, and they are like precisely building it for a year and so on and so on. And it is like complex stuff. But fintech, who is like based on the customer evaluation and is just working with consent of clients with one application and is measuring the classic behavior, for example, based on open banking, they can just offer like in the appropriate time the maximally tailored product or offering. So this is like only the top of iceberg and the creme de la creme, I would say, from technical point of view. So this is what we see at Crif, for example, yeah, and it is going like through all of the aspects, all of the journey of customer, since onboarding and evaluation, analysis till the final sales. Yeah, so I think the banks definitely desire to make these things like more accurate and with the maximum pace and maximum effectivity. But the fintechs are the players who are like pointing on the one of the aspects, and this is maybe why they are like. I think Revolut was mentioned. Yeah, this is a good example. So we see the way in doing partnerships definitely, because this will be like last sentence from my side. or question for the audience. Did you receive, like in the last 12 months, like very tailored offer from your bank? Doesn't matter it comes to a loan or to some saving program. And this is the question, because for example, me, I did not. I'm receiving from my bank or from my two banks same offer every month, and it is like cold, not even with my name. Hello, Thomas. So that's it.
Thank you. So, okay, fintech companies are closer to the customers, are doing whatever the customers want to. But Mr. Vanyo, does it really make sense? Sometimes it comes like little children. I want that toy and I want it now, now, now. Does it really make sense and a difference if you can open an account on a mobile phone in 3 minutes or in 5 minutes?
Very good question, and I would not oversimplify it. When I first heard about possibility to pay with a mobile phone, I thought, apage, I'm never gonna use it. Then I did give it a try, and after I give it a try, for many, many years, I don't even carry the plastic card anymore. So it's first of all, it's a matter of convenience. There was a very good presentation at the beginning. Customer is not changing, customer is evolving, or the new type of customer is coming around. And they will have simply different preferences and different expectations than we used to have a long time ago. I always like to remind the fact that the first banknote was issued by the Bank of England in 1694, and still for 100 years, a lot of the people only believe that money is what's a coin in gold, silver, or other coins. We know that eventually nobody ever now would be using coins or the bullion as a money. We all use paper, and eventually, in the future, you cannot stop the flooding. You can just prepare for it. So exactly like paper banknotes overtook the golden coins. Eventually, all sorts of tokens, let's put it this way, or digital currencies will be something that the generation of our children and grandchildren will consider absolutely normal. So there was a very good point from Martina Sobkova that banking simply has to evolve along with the customers. As there is this famous saying, change is not necessary because survival is not mandatory. So it's innovate or wither. And then when it comes to fintech solution, up to now, 40% of the fintechs are most known by the payment solutions because of the ease of use. According to some studies by Boston Consulting Group and McKinsey, 80% of the consumers in the US have already tried some sort of the mobile wallet. And as mentioned, once you try this digital wallet, you are not going back to even either the banknotes or forget the coins, really. But in the future, the development will go, as Mr. Pristac has pointed out, especially with artificial intelligence. Artificial intelligence opens broad range of really tailor-made solutions. It simplifies all this back office processing, which is mundane and very costly. But then when we talk about fintech, there are topics such as pay by bank, something that, for example, in Poland is increasingly popular. Walmart in the US now introduced pay by bank, which allows you to pay not even by the card or your mobile phone, but you send the payment directly the SEPA, the instant payments itself, it's one of those innovations that banks were not really super happy to introduce, because the SEPA payments allow you to really do transaction from customer to customer. In the future, with digital currencies, this customer to customer payment will be even possible without the intermediary. So that's just something that, again, the traditional intermediaries have to prepare for. But then when we speak about technological innovations, it's not only about these gadgets, mobile wallets, the mobile applications for the internet banking. It's, for example, embedded finance, when pretty much all the major online retailers offer their own banking solutions without the bank. When we speak about finance, one has to remember that any company, especially the big companies who are selling their products through the invoice, so they get paid in 14, 21 days, they are actually extending credit to their customer. Technically, for this 15 or 21 days, it's a loan until your payment arrives, and there are all other ways how to deal with that. The blockchain itself, outside of these tokens, as I mentioned, will revolutionize, for example, the securities industry, because it will enable very cost-effective, or it is already enabling very cost-effective opportunity how to take what, a simple example. There is a hotel in Athens which has a very good business. It's well occupied. It's nicely profitable. You can now securitize this hotel, turn it into the securities on the blockchain, and offer them to the small investors with a nice yield, and many other similar applications like that, which completely circumvents the banks. In Europe, because we are missing the one centralized capital market, the fintechs are inevitable, or the innovators in the field of the finance are inevitable. We had one major, following upon what Ms. Sobkova has said, transaction when the biggest Slovak traditional bank has acquired a newly, technically a startup, active in the growth financing or investing into companies, and then just to wind up other of those technological applications which where fintechs will be faster, because they are not afraid to experiment and go into innovations. It's not only the schemes for buy now, pay later, which is similar to the embedded finance. It's, for example, also better application of artificial intelligence during the credit scoring. Usually, a bank takes your regular income and runs it through some models and tells you how much you are worth or how much can they lend to you. There are already, in academia, that has been developed a long time ago, other ways how to score creditworthiness of a client based on his, the word social network is a bit discredited, but a social network is like your family. So a very simple example, I remember a long time ago, a friend told me that his classmate was turned down from getting a loan in the bank. And he said, like, aren't they crazy? His father, who's divorced, so he's not living with his family, is a multi-billionaire. So even if he had problems repaying his little mortgage, his father would just step in and pay it in. And that's, for example, something that traditional banking credit scoring models don't really account for, when we have a lot of these self-employed people, sole proprietors, again, people who have a business model or people who are building up startups, companies which have maybe not that much cash revenue, but they do have equity, or they build up a value. So there are, for example, in the area of credit scoring, in the area of tailored solutions, and in the future, increasingly in this customer-to-customer payments and capital markets or slash securities investments. That's something where fintechs will be faster in innovation. Now, and one last comment, that it's estimated that within 5 years, the value of the fintech industry would grow 6.4 to 1.5 trillion US dollars. Most of it in Asia Pacific. That's why I highly appreciate that a Slovak company such as Fintech Association by Mr. Chajko is active also in the Asia Pacific region. And it's estimated that within 5 years, 2030, 1/4 of the market capitalization of what we now consider banking and finance will be comprised just by the fintech companies. So just to sum up and reflecting on what Ms. Sobkova has said, fintech is here for real, and we just have to embrace it.
And it's growing, and it's becoming a big industry. I can imagine about the experience you had with your friend and his father, that if somebody would just take in a fintech company chat ID, AI, and just ask it, just evaluate this customer, please, for me, it could be solved in a second, and the bank would have this information about the rich father. Am I right? Artificial intelligence is something which we cannot just not let unmentioned. Is this something which is helping also the fintech companies to evaluate new technologies and to get closer to the customers?
Well, of course, I believe we cannot ignore the presence of the AI in the era we are living in. It's very dynamic and it's an ever-changing environment. I represent a fintech company, which is a wealth management company, which is competing with the banks because we are fighting for the same client. We are using AI not yet. We have some use cases where we can see that the technology can help, specifically AI. We have a digital onboarding of the clients. We have a biometric system that verifies the client and signs the contract. We also use the robotic process automation on several fields of processing of the either payments or execution of orders. But AI is definitely here. No one would like to miss the train. I don't see the train yet. The rules of the company I represent has a strong relation to the physical financial intermediaries and selling the products. As Tomáš said, he's getting cold calls from some AI chatbot or a robot, which is not very personal. I think the physical distribution, as we know it, especially on this market, is significant, is important, and as of now, I don't see how the AI would actually replace a physical human interaction. Of course, it can help. It can help doing some analysis. There's also a regulatory issue of how can you regulate a computer, how can you replace it with a portfolio manager, which we have some regulatory obligations that the portfolio manager has to fulfill. So I don't see that now. Definitely there's a blank spot in the regulation, which probably will be filled very soon.
So a living human must be on place all the time if you make your contracts and if you make your deals?
Well, apart from the banks, which have opening and closing hours, I believe AI is working nonstop. But we are trying to get to the client as close as possible, because the intermediaries, they just don't have the closing hours.
Thank you very much. Mr. Tretiak, you have a lot of experience of both regulated and unregulated markets or industries. Brussels is now coming up with regulation in the field of information, financial information, with the FIDA. Do we need it? Do we need regulation on this field?
The question is, do we have another choice? So we need it or not, we got to take it. But first of all, at Dovident, it's first time after the 40 years I was there as a child in Československo. So it's really nice to hear the Czech and Slovak language. Thank you for that. It's like for me trip to my childhood. Thank you. Thanks a lot. And about FIDA, about the regulations. I remember the times when the PSD2 comes to the market, and the bank said it's irrational to give the another companies like fintechs the people's transactions. It's dangerous, right? What happened? Nothing. Banks exist. Many fintechs exist and help the people to borrow money now, to lease money now, to rent a flat now, to travel, to buy tickets now. Because customers want to have a decision about their finance right now, not next week, not next 5 hours, right now. So I also fully agree with Tina and Tomáš. They mentioned about there is no such a thing like fintechs versus banks. It's fintechs and banks. For example, in Poland, 80% of Polish banks or banks in Poland are using the tool of Contomatic, the company we have a privilege to work with. So they're dealing with their transactions with the Contomatic. The Contomatic is giving back the scores, like Bielik, etc. So it's like they're dealing with their own transactions, right? Really strange. Why? Because the fintech do things better, faster, use the new technologies, etc. The banks are the big boats. To turn to the left or turn to the right, it takes sometimes a year. So the fintechs are more flexible, and the people want to have a contact with flexible companies. They want to flexibly invest, the flexible rent, the flexible borrow the money. About the FIDA. Okay, PSD2 was the open banking. FIDA, long story short, is the open finance. Yes. So what's the difference? The difference is the fintechs and the customers will have more information about their transactions, wages, insurance, cryptocurrencies, etc. Is it safe? Was it safe to deal with the transactions with third-party providers, providers, for example? It was. It will be safe? Yes, it will be safe. Why the Brussels doing that? To open the finance market, to make the possibilities for customers to earn money, to spend money, on the end of the day, have a possibility to fintech and banks as well to grow. Let's make this market alive, something like that. So I'm absolutely not scared about the regulations. Regulations are good. Sometimes, I remember the times when in Poland, the pool, there was a place when the loan companies are regulated. They are dealing about the transactions to understand the customers to be more safe without the regulations. So it's a natural turn to regulate themselves, understand the customer, and to be more safe, to be more competitive, right? With the banks. Exactly, because competitors. So there's nothing wrong with the regulations, to be honest. It's safer for fintechs, it's safer for banks. On the end, the most important thing, it's more safe for the customers.
So the ability of the financial sector to innovate will not be impacted by this regulation?
It's always impacted, but that's how we are growing, right? When there's nothing changed, there's no reason to grow, to change anything in your structures, in way of dealing with the data. Why you should do that without any changes around. But the environment is change. It got to be changed as well. You got to react on these activities and be more focused about your activities, change your models, change your behaviors, change your ways to adapt. Of course, it's always impact on fintechs and beings, whatever, but it's good for us. We grow in that way.
Thank you. Mr. Reytt, you mentioned that your business model is working, and it's good. But when it comes to the traditional banks and your bank, how do you measure your success? If you just look at them and look at your business, is it really like you wouldn't be successful without the new technologies? And is it a need for the future to have always your foot in the front, so somewhere where you will be the leader of those new technologies and implanting them into the banking system you have?
There was plenty of the questions already to you raise. I don't know whether we can compare with the big banks. It depends on the KPIs, what is expected from us. So we have also our stakeholder, which expects something, and I think we're delivering it over the time. It's great. Yes, I fully agree that the customer needs and expectation are evoking. So that's why also the fintech company helps bank somehow to overcome it more quickly, more efficiently. And we do believe that that's a good way to cooperate rather than to compete. That's why also in the past there's been plenty of the methods like IP or something, PSD or whatever, that you can connect and do it jointly instead of separately, which also gives a benefit to the companies and especially to the clients or the customer. We do believe for us, as we're not a big bank on the market, yeah, to be just a step ahead before the others is the way how to survive simply on the market, how to make and be observed as that we're here. We are offering something extra, different compared to the big bank. But of course, the market is developing extremely quickly. So somehow to keep that position for us, and we are aware, is a challenge. Will be a challenge, but we took the challenge already.
Even if we are directed onto to the youngsters, because they are very vulnerable. If there is some better offer, they will run away.
Nowadays, it's so easy for a few clicks and you're gone. You open it in few seconds or minutes. You send the money, few clicks. So nowadays, from the consumer perspective, it's really easy. So the situation a few years ago, which I think also the even evaluation of the offers would take time. Nowadays, you go to the web, you can compare it. It's quickly, you decide, make like done. So yes, the market is really evolving quite quickly, but I think it's good. It's good. It needs everybody more think about what's the next steps or what's the next level, and overall primarily will benefit the economy and the customer, which I think it's good. So if we'll be stopping us, we will be not developing, and we'll probably be killed over the time and in the future.
And what is
somebody will bite us?
And what is more important for the customers, if you make money for them, or if they feel comfortable in your bank?
Well, I think the banks stands over the century on the stability, on the trust, yeah, and this is something which we will have to take it for the future. Whether the customer will build the money, it depends on the customer. What's for somebody, some offer might make sense, for somebody not. But I think the banks will become banks, that will be the banks because they are, I would say, the stones of the economy. So the trustworthy, and something. This is the main, I think, attribute for us over the sector that we will have to still bring to the market and to the customer primarily.
Which brings me back to your slogan, i svou banku můžete mít rádi. Mrs. Sobkova, is it really about the feeling? For example, the automotive, the industry changed in the way of marketing. Nobody's now asking about how strong is the engine or how strong are the brakes, but how I'm feeling in the car and what's the color and do anybody see me in this wonderful car? So this is how they represent now and they present their production. Is it the same in the bank? You have to feel good, not just making money?
I think it's very complex questions. I love the comparison to the boat, like the fintech is kind of speedboat and that the bank is a big boat. And also the mention about the trust, because it wasn't mentioned whole the discussion, but just now. I think that trust is very, very important. Just think about yourself. How many of you are using fintech, like Revolut, PayPal, or whatever, something like this? How many of you are using it for your salary getting there? How many for your daily things? Not so many. And that's same with the banks. We are using fintech. We love them. We love the bank features, everything. But when the bank will have beautiful features, when it will look everything's totally amazing, but in the end you will not be able to send a payment. In the end you will not get the money properly or anything. You will go out. And it's very easy. You can go out in a minute. So I think there's very, very important topic of stability. That's also what makes the banks like their position on the market. And that's also the reason why they need to cooperate together. Like the stability is very, very important. And I wanted also to add up that in the future, it will probably not change. Because also it was mentioned here, digital like currency, maybe the digital will change, but still people will look for stability. And we see it also, for example, in investment. Many people are investing, but in Czech it's about like 50% people started investing, but regularly investing only 25%. But most of the money are on saving account, bank. And when there are like researches, why is it? People just say, trust it. And even now in 21st century, there are people who have their money in their own house, like under the pillow, as it's called. So, like, it's, yes, we live here in bubble, maybe in Bratislava, maybe in Prague, big cities are bubble, but we look around in whole Slovakia, whole Czech Republic, people really are seeking for stability and seeking also someone who they can trust. And what's also very common, and I'd like to add it up, many people start their bank account in the same bank where their parents have their bank account. So they are used to it, they trust the bank. So usually the bank takes care for generations about the money of people. So I don't think that it's so easy just to say like it will be beautiful and use it. But what I have to mention, I tried the payment way as from mBank. And yes, in the very beginning I was thinking like not to use it, and now I don't have it. My sports tool, but I was thinking I wanna do it. But yes, it's very convenient. It was same like for example when like people say you will not use it, you start to use it, and you use it on a daily basis. Like, I cannot imagine my bank wouldn't allow me to pay by mobile. Like it would be a bit problem, but it's a standard. When we talk about like, small features, I think it's not so which makes this huge difference.
Don't underestimate cash. We will have a transaction tax in a short of time. Maybe we will go back to the era of cash. Mr. Chaya, what are the fintech companies really doing? Are there just making all these financial services more accessible for the clients, or are you just also developing technologies which can make money for the clients?
Well, of course, when the banks be considered as a backbone to the financial market stability, I believe that fintechs are the muscles that are actually moving the whole market and trying to lead the adaptation of the processes that the technology is opening for them. Me representing partners have been constantly working on new ideas how to boost business from the analysis to the complex management of the health. There is a constant change where we cannot stop. We have to make the products for the people really make them understandable. I can relate to what the lady said that only very few people are investing. It's probably because of the legacy we had, the messed up privatization, where many people have lost the money, interest, or belief in the financial system in this country. We are trying to make the products simple, accessible, and delivery has to be fast. We, as a startup in fintech, can adapt to the trends, to the regulations much faster than banks. We have a department in the company which is focusing on the business development and implementing the new technologies to the way of work or daily lives, including the partners, including the customers, including our systems. So it's a never-changing environment. Who doesn't adapt is likely die soon.
When we are dealing with some new tenders, doesn't matter if it's bank or if it's fintech company, we are trying to persuade decision makers that they should offer or sell benefits over the features, because it's a little bit different kind of marketing, let's say. For consumer today, it's very important to have benefits, to feel the benefits. Okay, how fast can I borrow money? What should I do if I need to, 1,000 euro, for example? How fast can I transact? Because we are still living in an era where it's needed, like instant SEPA is not in every bank. So, and how fast can I be evaluated, and or in how many installments can I repay this new device I just bought? So we are trying to inspire banks and fintechs to focus on these benefits, and then the sales is like little bit smooth. And I just agree with all of the colleagues. The banks are here, and fintechs are here to try success. I think sometimes there is also failure, but there is much more success over the last decade. And it's about complexity and benefits I mentioned. So, me personally, I cannot maybe without an exception of mortgage, because there is lots of involvements from many parts of this. But in other products, doesn't matter if it's financial, it's investment, insurance, I cannot imagine that I need to go somewhere to sign some papers and to be evaluated, assessing once, twice, bring or ask it to bring another document. No, I think this era is gone.
Okay, start to create an account. Try to it's still like that. Okay, so are the fintech companies just helping the banks to grow, or they save their money with the new technologies, savings in the banks, so they can use the money for other purposes?
Yes. No, kidding, of course. Of course, yes. You should also know banks, big boats, related wages, but they also see the future. They also see the market, also see the fintechs, also see so create the departments, the structures of the new technologies, and they try for the fintech perspective, the banks please create a model based on our consumption data. It's only 1 million data. Wow, great. So, brilliant special model for bank. The answer, okay, what we understand the customers, what we can do with that, and also the information how to do it. So they are also thinking about the implementation of these technologies on their field. But on the end of the day, it's all about the money. So if I can, for example, buy this service outside from one for 10,000 monthly and create the department, 20 people, pay them 100,000, doesn't make sense to do it. The technology is already there. So it's like it's not. I cannot discover America twice. Yes? I should do that. So that's why also this I can say also the friendship between us as well, and they still understand each other, but trying to create this communication, this partnership, beneficial for both sides. And Martin has said about the choose banks because it's not trust. It's absolutely right. Yes, and it's really difficult to rid the bankrupt. First of all, have a government and teachers. Okay, the history examples it's collapsed, but it's like 20 years, 30 years. So also keeping my money in my bank, right? Or with my fintech something account. So I want to feel safe. But when I'm deciding choose the rent a car or the take a loan. So I'm not asking my bank. It's my decision. In terms of fintechs, have a huge portfolio of possible decisions to make and choose. So it's very, very custom, I believe. And that's the way the fintechs should go. As I said, you have to be comfortable with it. Safety is the banks. Comfort is on the fintechs. Speed is on the fintech side. Way of investing is on the fintech side. So it's like it's a big ocean, a big ocean. Big fishes, I believe.
Just one more. Yes, the question was if banks are growing or bigger revenue. There is lots of banks I know which started to use ESD2 evaluation for the rejected clients at this stage. So when the client was rejected, it was the cow criteria of bank. After that, they applied the linking analysis. They bank it's different bank by bank, but 20, 25, up to 30% of those rejected. So it's just better analytics. Only like one example. So definitely.
Let's get back to savings. Are you use fintech technologies, you save money, and does it mean that technology is less people?
Well, I would disagree with there is a bank something and there is a fintech. From the customer perspective and also from both the perspective, it would make sense. Firstly, so yes, it might save. Well, it might be quicker, so that's why our banking trying to incorporate that technology into that. It might save people, of course. AI might save people. The question is, in which part, sector, service does it make sense, and in which time does it make sense? we're also all over the time evaluating what to do and what not to do. Would the benefit or some cost-benefit analysis be enough for us? Also, would that be fairly okay for the customer or not? As just one of the example, as many of the banks or many of the companies already implemented AI on the like IVR system, if you're calling there. I really hate it. For example, and also we evaluated that the customer hated it. That's why we decided not to do that at the moment, right? It doesn't mean that we will not get back to the thoughts, to the idea in the future. So for me, it's just to look on every single things and evaluate. Makes sense? Doesn't make sense? Is it worth to do it? Is it doesn't worth to do it individually? I think again, I wouldn't see as two things. Really, this both quick and these heavy make sense. And overall, I think this cooperation is making us stronger.
Thank you, Mr. Chair. Like people and technology, you mentioned that without a living human, there cannot be a good contract or good cooperation. Is this also to the future? Right to say that, because it's always growing, and also the communication abilities of the AI are growing and growing. And I had some cases where the customers didn't recognize that they are communicating with AI.
Well, that's probably one of the few lucky cases at the moment, but the belief we have, I mean, I don't have a crystal ball, so it's like predicting the markets. Only the history can show if we are right or wrong. But as I said, I mean, we cannot forget that there is this new era, this new trend. We will be closely watching. We can definitely see some aspects of how we conduct our business where the AI and the technology can help. But I believe that the human interaction is at the moment irreplaceable in the relation, because you're building a relationship with the client which can last ages. As was said, that there are people who open bank account based on the choices of their parents. We believe that a strong relationship will have the fruits in its time. And we are just patient enough. I mean, we are not rushing anywhere. We are not under pressure. The business we are conducting makes sense and makes some good numbers. So we'll see.
Well, the case I was following was about restaurants. It was 1,500 restaurants, and the bank wanted to sell them new terminals to pay. And it was the communication with the help of AI. And some clients responded like, oh, I really see that you have gone through all my business and you have gained all the information. So this is very serious, you know. And I recognize you now as a really, really serious partner. That was some kind of 20% of responses to the AI. Okay, how can you get so many information about me? And I find this is really something exceptional. Okay, your choice.
The best description of what banking really is, I know, is that banking is about selling trust and buying risk. And on both of these sides, that has been mentioned by Mr. Pristac, I know unnamed Eastern Bank, which already 10 years ago had a model by which 80% of all the consumer loan applications were processed automatically without a human touching them. Only 20% of the tricky applications really had to go through the loan officer. So on the side of buying risk, which is not easy, you know, buying risk, lending money is a complex, complicated issue. That's where the banks earn money. Exactly as you said, all these new technologies do add significant value and lower the cost, or lower the probability of default. On the side of selling trust, as has been mentioned, it's not only about the cryptography or the secured connection, which is important. You made a very good point about how AI can really do a perfect mirroring or perfect background check on you, which gives you the feeling that, oh yeah, this is somebody who's interested in me, who learned so much about me. It's a trustworthy partner. But also I would like to emphasize to what Mr. Chaya said, the front office, the people who deal with us in the banks, that's just a very small fraction of the whole process of the banking. There is a huge part, middle office and back office. In the past, there were really human workers who had to process payments. It's a very mundane, a very boring job. They were all day just processing the SWIFT payments. Where AI or where technology is replacing humans is exactly in those most boring, mundane jobs, where actually technology improves how precise or how well and how quickly and how cost efficiently the job is being done.
Not making decisions, yeah?
I don't know. I don't think when it comes to the decisions, that's a very similar topic as autonomous driving. I personally, not because of the technology, I believe because of the lawyers and because of the regulations, we will not get fully autonomous driving that quickly, because then it will be tricky if something wrong happens, an accident, even a fatal accident, who will be responsible? The driver who turned on the autopilot, the producer of the car, the producer of the software, the telecommunication company which provided the connection to the satellite, etc.
Broken roads we have in Slovakia.
Yeah, so no, the decisions will be done by humans, and also this human touch. But again, speaking about the front office, in the old days, in the bank, for example, the investment advisor in private banking had to do a lot of reading, of research of his own bank or of other banks to be able to advise the client. For example, there are now fintech solutions which make this, very easy to learn about the current situation, which significantly strengthen the capability of all the investment advisors when it comes to really tailored-made solutions based on the preferences of the client. So, yeah, again, both on the side of selling the trust, there is a significant contribution that fintech makes to the banking business, and on buying risk, as has been said, that's even more so. And the jobs that will be eliminated are the most boring kind of back office jobs, which in principle free that workforce to do something more creative, something more fulfilling and engaging.
Mr. Sobkova, we have learned from the presentation that the youngsters are more vulnerable to give up their personal data to the banks. So is this just really something they appreciate because it's simple and they can deal with their money as they want to, or is this naive, like giving up your personal financial data to anybody you don't know, who is dealing with it and who is making then a tailored offer to you don't want to?
I think that's quite a personal question. It depends on each of us, because not just to banks, but we are giving our personal data to social apps. Most of us are doing it, and what we are getting for it, we getting for it almost nothing, but we are in touch with our associates, with our friends, with our family. And I think that many people don't realize what they are giving out. I think they are not I see many discussions on many conferences about giving the data. But when you talk with people outside of the financial bubble, outside of the technology bubble, they are not thinking about it like this. They are just thinking, okay, I give them my age, I give them maybe something about me, and it's very fine. That's what I'm talking about, the social apps and outside apps. When we are talking about the banks, you can see the research. I think it's similar in Czech Republic and in Slovakia. Banks have very, very high trustworthy. So people giving banks their own data, but they trust that the banks are working well with the data. For example, we believe they are doing it because, for example, in Czech Republic, the banks created, it's also a fintech, bankovní identita, and you can use it just to registration to the state, like state services. So it has a very high trustworthy. So when we are giving our data to the bank, we know that, or we believe that they will work with it properly. But from my perspective, people don't even think they are giving data, like they are giving it to social networks, to Netflix, to simply anyone. And if they get something for free, like for example, you fill it and you get 2 to 3 months sale or something, they do it immediately. And most of the people from the research, it's about 90% of people are doing it. Yeah, I heard about the conferences discussion about it, but in the real life, it's totally opposite. And it seemed like with the investment for all the conferences, I hear like people should invest and everything. Talk with the people outside of this program, yeah, they are saving, not saving it. It's under the pole.
I really like to see you smiling, but there were some very serious cases. I don't know if you heard about the last one from the United States. A woman died after she ate a meal in a restaurant where before her husband told the personnel that she cannot eat specific meals, so don't give her those meals. And they did, and she died. And it was in a Disney restaurant. And the lawyers of Disney found out that the man was subscribing to follow the Disney Channel, and even in this contract there were some words about he cannot sue Disney, however, in his life. So his woman died, and he cannot sue Disney because he subscribed to follow the Disney Channel. Okay, how?
Can I just add one
Yes.
thing, not to Disney, but overall to the services when we were talking about? The thing is, when we are giving our data to the services and we don't think about data, we simply expect that we get something extra. And if we get it, we will, most of us do it. And not just people, we can categorize people that those not educated people are doing it. But from statistics, for example, when you think about love scams, which are very popular, cyber hackers, it happens mostly like people with the university titles and, for example, higher age. So it's not so easy to categorize people about the giving out of data because I think almost all of us are doing it.
Yeah, I would agree, and maybe in addition, there is always the need to have some benefit. Because if I ask the audience, how many click boxes did you submit in last 2 months? Probably dozens, 20, 30, I don't know. So almost nobody of us, I think, is going to terms and conditions, to special conditions, to legal policies, etc. So from our experiences, when there is a benefit, for example, if bank is gonna give you 0.5% down for your mortgage rate, just if you give a consent with your data, you'll do it. If you wanna buy a new car with the best accessories, you are offered, if you give consent of your data, and you will have some better financing or some lower price or some extra package, you will do it. So there are like two levels. One is from the consumer, which is from every time is using all these costs and benefits. And another level is the security and the risk benefit. I think there is a huge trustworthy and huge level of security in banks and also in fintech, because 99% of fintechs are also regulated somehow, directly or indirectly. So all of the transactions and all of the interactions are done in the secure space. So I think it's how the banks to give consumers what they really want, and to deal on the other side to deal with their data to their benefit. That's all. Um, what I would like tell.
Okay, so to be honest, all this business, we have some. Want to add something, Mr. Trzeciak?
Yeah, we are still, around the regulations. So, uh, from our perspective, regulations are bad. They are borders of our freedom. We cannot do that. We can to save this data and after that reject that. But at the end of the day, it's for our safety. It's for our safety. So the people mentioned are not thinking about the safety during transactions, about what they can achieve on the end of these transactions, not about the risk or safety. If, for example, yesterday was the Champions League match, I need to watch it. By the way, 5-2, dramatic. But so I want to buy the access. Yeah? So I wasn't thinking about agreement or this text as long as a tonight. I just want to watch the match, and it's work like that every time when people want to do something or something. It was like that. Of course, from example, financial perspective, on the end of the day, borrowing 1,000, know how much money I should give back. Yes. And this number is in the middle. It's like 3 cents for information about transactions. Or if someone died, yes, you cannot sue us. So, of course, it's not possible to read every agreement. It's not possible. And when you're going to the bank and you pay papers for our yes, because you can mortgage yes. It's rather important. But the internet stuff, you meet this kind of agreements and the special letters, the small letters, uh, many times, day by day. So it's impossible to do that. So that's why we're talking about also the regulations. Now I'm talking about regulations. Okay, who's next?
Okay, ladies and gentlemen, we have one questions from the crowd. What are the potential threats to the existence of the fintech companies? Mr. Chair?
Well, it's hard to predict. We're expecting, I'm going to repeat myself, and actually, it's the regulations, because it's something that we need to take into consideration in every aspect in case we are trying to implement something. When or how is it going to help us in the future? There's a common saying that if you think that being compliant is expensive, then try not to be compliant, because that's gonna go into millions. So one of the biggest threats, I would say, is to be able to compete in a very regulated field. I think the finance industry, especially the capital markets, is really over-regulated, I would say, which I agree, it gives you maintenance where you can move, but on the other hand, large organizations like banks might be bound to postpone the implementation or cooperation with the specific fields, which I think is at some point.
You were talking about let's repeat the question. Sounds.
What are the potential threats to the fintech companies in the future?
Potential threats. Okay. First of all, it's about the security. It's a potential threat. Yes. When the bank has some issues with security, the penalty bucket, they stand it, right? But when the fintech have a penalty, 5 to 15% of the revenue, it's collapsing for this kind of company. So from this perspective, they deal with the people, the models, things, scores, etc. But safe and safe app. So yeah, this would be tricky things from the fintechs. And about the regulations we have mentioned, but I strongly believe there is many differences between the AI and the human beings. The AI is learning about the history. Yes, it's learning. ChatGPT is not creating something new. It's creating something based on the history. Human beings have this possibility of creating something from nothing. So they are better from this perspective of the machines. So I also believe if there will be very strong also for the European Union, it doesn't matter. Find a way, earn the money, our services.
5 cents from me. Based on the research, the big challenge and potential threat for many of the, especially small fintech companies, is being able to scale up. That means being able to grow fast enough, but also the profitability. That's something why this cooperation between traditional banks and the most successful fintechs is usually a win-win solution, because in this, especially for example in the area of payments, the customer gets things very cheap or for free. The question is, how do these companies actually make money on all these super cheap, super technologically advanced, but still low revenue products? So they either have to scale up significantly, or they need to have some other schemes how to actually generate profit. So that the profitability is a big threat for the fintechs. On the other side, not to be so gloomy, when we speak about the trust and what Martina Subkova has mentioned, reality is that especially for the generation Alpha and younger generations, in the old generation, the word bank was the token of credibility and trust. For the younger generation, they trust their chatting applications with a lot of their intimate personal information. They trust the social networks with a lot of their personal information. And research shows that especially this younger generation, Generation Alpha and subsequent generations, they actually have high trust in these big technological companies, which again offers an opportunity, mentioning that Asia Pacific is the fastest growing area in terms of the fintech. In China, a lot of the consumers don't use actually traditional banks or the cards for the payments. They just use their chatting application to send money among one another. So this evolution of the new consumer preferences and is something which creates a significant space for the fintech companies to grow. Actually, one of the important triggers for example, such an important and historic project like digital euro, central bank digital currency, was when I want to make advertisement, one of the major social networks came with an idea, oh, we will issue a token, our own currency. And then everybody was like shocked, wow, they have 1 billion users worldwide. And if like small percentage of these users will start using this currency, it will be a real challenger, and then it might grow in popularity. So that was like a big trigger, like, we need to have a ready-made digital currency of our own to be able to challenge these big technological companies also in that sphere.
Well, thank you very much. We have spent our time, which was dedicated to this panel discussion. Are there any other remarks you want to tell to the crowd, or is this the end? No.
I will be very, very fast just to the threat. I think that's not a question because I'm optimistic, maybe not threats, but challenges. Because when I'm writing like 10 years, as I mentioned in the beginning, we are still talking about some threats for banks, for fintechs, and etc. But they are here, they are evolving. And as Vladimir mentioned, the market with it is growing. Also, the banks are growing, they are stable. It can be, for example, the regulation, for example, transaction tax will be very hard for payments like fintech, or it can be like digital euro will be hard for some banks. But those are the challenges, and again, I think banks and fintechs fit together.
Okay, if anything's happened, will happen, we have the old-fashioned gold here and silver. I really appreciate that you have been taking part in this discussion. Thank you very much. Thank you very much also, you guys in the crowd, for listening to us. We will see each other in the next panel discussion. Thank you very much.